semi-analysis, Dylan Patel, he gave an estimate that he believes it's going to save 12% of the total data center power consumption just by eliminating these transceivers. So, and there's two of them on each cable that connects every GPU to every other GPU. So you can imagine there's a lot of these within a data center. So it's a lot of equipment that got eliminated.
Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the cash flow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Exhibit C, the supply of oil, is probably not going to change based on the Putin-Trump phone call yesterday, because we seem to be a long ways away from a 30-day ceasefire. And I think there's a chance that the US Treasury, who is set up to do this, will start to curtail some Russian production. And with Israel back on the offensive in Gaza, I think it will be very hard for Iran to take an opportunity to negotiate with the US. I think what's more likely is those 2,000-pound bombs, which the US delivered to Israel that Biden wouldn't deliver, might be used sometime in the next few weeks to try to destroy Iran's centrifuges, which they use to enrich uranium, which are underground. And apparently these 2,000-pound bombs are able to reach underground facilities. Iran's on record as saying if that happens, they or the Houthis or someone will put drones and missiles into the Saudi oil loading facilities. So the range on the upside for oil just got a lot higher. Now, I don't think even with those kinds of macro developments, oil will trade for much more than 80. But this chart showing surplus capacity of 3.5 million barrels, that surplus capacity would go away immediately because Iran's production would go down. I think if Putin is just intractable, it makes sense for the US Treasury, who can do this. They have the tools. All oil transactions are settled in dollars. They can track the dollars on a cargo by cargo basis, that there would be some pressure brought on Russia to be more flexible on making an initial ceasefire in the Ukraine and an eventual settlement. On natural gas, demand's good. LNG facilities are being approved. Huge turnaround from the Biden administration. We have the Speaker of the House, who he generally does not tell things or say things that he's not sure of, claims that in discussions with Biden last year, the Speaker of the House, Michael Johnson, asked Biden why his administration had put a hold on LNG construction. And Biden said he didn't think there was a hold. He thought that was a bad idea. So clearly people around Biden were making decisions for him. Whether or not they made the decision, all those pardon decisions, whether they'll hold up is another question. But it's a bit of a shock to have that kind of testimony coming from Michael Johnson about whether Biden knew what was going on. But now the next time this chart is redone, LNG feed gas will be higher for 25 than 14.5 Bs. On the power, this is an interesting phenomenon, but the power demand, which is around 31 or 32 and had been there for a long time, since 21 has gone up by 8 Bs a day. So it's gone up more than LNG has during that period. During that period, LNG went up by about 4. I hadn't realized this till reading Michael Semblith's annual memo on the energy industry, but power demand in our country is flat. Everyone's predicting it's going to go up because of data centers, but through last year, it's flat. And I'm going to try, there may be another exhibit here if we can get decent data together on power, because there isn't room on this page to add much, but that is really interesting. So the increase in power to gas of 8 Bs a day over the last 4 years has to do with closing coal plants, having a lot of wind and solar available, which are not reliable for capacity because of the sun not being reliable, wind not being reliable. Backing it up with batteries doesn't really work because the batteries out there only hold about an hour of, have an hour of discharge. So that has caused more gas usage. So, but this is the key point. It is an increase in power consumption. It's just more has been made from gas. Exhibit A, forecast for 25 is pretty much in the books. We will add a column for 26 when and if the Trump administration puts out a budget, which I think by custom, that's supposed to come out in April. And then the House and later the Senate goes to work on the 12 expenditure bills. I can't remember. I mean, it's at least 10 years, maybe a lot longer, since the 12 expenditure bills have been passed. We've been dealing with CRs, or continuing resolutions. And in fact, last Friday, we passed a continuing resolution to take us through the end of this fiscal year with Chuck Schumer, the minority leader, voting for it and getting all kinds of criticism from the left side of his political party. But we're set through September. But, the Trump administration has to propose a spending level, and then the House needs to go to work on it. So we'll fill in. When that happens, we'll fill in at 26. Now, how much lower will spending be than the $7 trillion, which is going to happen in 25? That's really fascinating. I would hope that what they propose is at least $500 billion lower. You can't do much about interest. Interest is going to be $1 trillion of it, or maybe more. At the amount of debt outstanding, $1 trillion is a 3.5% interest rate, and both short rates and the 10-year rate are over 3.5%. So that $1 trillion is likely to go up by a bit. Here's an interesting statistic. If you look at Social Security and Medicare, not Social Security, but Medicare and Medicaid, it's a pretty high portion of the remaining $6 trillion of spending. And that's where their effort on waste, fraud, and abuse is going to have to, be effective to get spending down by $500 billion. The all other category, which was $900 billion before COVID, and now for this year is $1.3 trillion, probably there's $100 billion or so that can be saved there. The defense budget, which is around the same as interest, actually a little less than interest, $910 billion. There's probably some savings there, but I think there's enough need to cope with the changing status of the weapons that we face. In fact, the growth of drones or the hypersonic cruise missiles. even if there is some saving in some parts of the defense budget, I can't imagine that that's going to be too much less. So squeezing out that $500 billion, in other words, proposing a budget with total spending of $6.5 trillion rather than 7, is a tall order. It'll be very interesting to see how that comes out. Any comments, Mike or Jason?
The only other thing I'd add is we did get some CPI data. I believe it was between last week and now. It came in slightly below expectations. The other thing, and Hunt, I don't know if you've seen this yet, but there's an interview with Scott Bessent with a couple of guys from the All In podcast that came out yesterday. It's quite good, and it's about an hour long, so it gets into detail on a lot of the administration's plans and how to really thread the needle when it comes to tariffs and maybe slowing some things down a little bit and moving forward with their agenda. So I think that one's worth checking out.
Absolutely. While we're on podcasts, I've been listening to the podcast we're doing Wednesday evening. So Thursday, Prem and I drive out to Center Island. We've already listened to the Telltales podcast. So we've been listening to another podcast, which I think Mike and Jason have been through, the interview with Morris Chang, the founder of Taiwan Semiconductor. It's a 3-hour podcast. It was set up, these two gentlemen who do a regular podcast, who are introduced to Morris Chang, who's now retired. If you have a long drive or a long train ride, I really recommend it. And I know Mike and Jason are familiar with it. They can probably put directions to find that podcast on the website or on the email. I strongly recommend it. Morris Chang, his career, what Mike and Jason spans 30 years since he moved from this country and Texas Instruments to basically start Taiwan Semiconductor. But I mean, he covers that 30-year period, whatever it is, in enormous detail. I think the Morris Chang is in his early 90s, but he has lost none of his mental acuity. Prem made the point while we're listening to it. It's kind of like the tech industry's Charlie Munger. I mean, he has a very understated way of making his points, but they include, when Nvidia was failing and TSMC more or less came to the rescue. It includes when Terry Goh, who was the founder and head of Foxconn, which makes all that Apple equipment we use, came for dinner, bringing a senior Apple person. It is just fascinating if you're following the tech industry. But we got to get into our agenda here, but I just wanted to mention that because it's just spectacular, useful to hear Morris Chang on these subjects. He apparently has done a biography. He did the biography in Chinese, and it hasn't yet been translated. So it's all you have now to hear about his career and his views is this podcast. Anything to add, Mike or Jason, on listening to Morris Chang?
Just that the podcast is called Acquired, and if you're interested in business history, they do a really good job of going very in depth on the story of some really great businesses. So this one's a special one because they actually were able to get Morris Chang for an interview. But they actually had a previous episode where they went even deeper on the actual history. So this was that episode is sort of like layers on top of another 3 or 6 hours of Taiwan Semiconductor history.
Yeah. Last week we didn't get to Tesla, speaking of economic history. So we're going to have Jason hold forth on Tesla today because we got busy last week. So over to you, Jason, on what we think about Tesla at this point.
I think things are going to get harder for Tesla before they start going well again. I mean, all the public backlash is pretty fascinating to watch. The amount of vandalism occurring on Tesla vehicles just because of the actions of the CEO that aren't even related to the company. People's individual cars are being destroyed for no reason. So there's a really big disincentive to purchase a Tesla right now. Sales in China are coming down and probably will continue to do so due to the advancements that BYD made with the fast charging. So I forgot what they call them, not superchargers, but some type of creative name for chargers, but it's essentially provides you with a near full charge in 5 minutes. So it's finally getting parity with pumping gas, which if Tesla or some other company brings that technology to the US, that'll be a big deal since EV adoptions is pretty high in California. It's probably the highest in the country. And we witness people queuing up at the charging networks at grocery stores and waiting there in their car while they're charging for 30, 40 minutes. Not a good experience, but once you can get a 5-minute charge, that'll really unlock the ownership of a EV for most of the people that live in multifamily housing, apartments, condos, downtown, that kind of thing.
The only other thing that I heard the last week is that Tesla did get some sort of a permit for testing their Robotaxi in California. So they're now, just to give a little bit of history of full self-driving and the Robotaxi, Tesla has not gone through the regulatory hurdles, and they've said that that's a strategic move. So this, first step towards getting through the regulatory hurdles in California is a sign that either they've changed course or they're happy with the performance of the technology that they think they can breeze through the various layers. So we'll be watching that.
Interesting. Yeah.
Jason and Mike, do you think it'll still be on a state-by-state basis? I mean, that's the most likely outcome, right? For just the way Waymo's done it.
I don't know what's likely. That's the status quo today. Ideally, there's a federal level of regulation on this.
Yeah, I think the hope is for federal level regulation, but I think the reality is it de-risks it for federal regulation if some of the states kind of go through the painstaking process first. So then, if the federal government decides, what they did in Texas or what they do in California is good, then it would be easy to, in a sense, implement that everywhere. So we'll see.
Jason, before we get too close to the end, healthcare news?
I don't have any big news. Harrow did report preliminary earnings. They did not release the 10K, waiting on their auditors to finish auditing the financial statements. But the market reaction was kind of interesting. Harrow reported what we expected and what analysts generally expected, and the stock reacted pretty positively. So I don't know where market sentiment was pretty negative on the company, but it had gotten pretty cheap, so it presented a good buying opportunity.
Yeah, on future outlook is quite good, and the big question is about a drug called Triessence, which they are reintroducing to the market. So, the belief is that is easily a $100 million a year drug, and they have patent protection on it through 2029 and a plan to introduce a better version. So presumably that better version would be able to be patented as well. So I think it's a pretty interesting point, although, you always worry about companies that aren't able to release their quarterly report on time. So, but we think, based on the statements for the company, at least, it's just a momentary bump in the road, if you will.
Okay, let's take a quick break for a message from Oak Cliff Sailing.
From Foiling Week through an entire week plus down in Pensacola. We had a crazy adventure, a lot of sailing, a lot of great conditions, and also some warm weather too, which was a benefit. We're here right by our NACRA 20. We've been training for the past few months on a bunch of different boats. Tell us about the boats that we've been on, Ewan.
So I've been out on the NACRA 20, the NACRA 15, and the UFO. NACRA 20 is a 3-point foiling 20-foot catamaran made by NACRA. The NACRA 15 is a 15-foot catamaran used in the youth classes in youth Olympic development. And the UFO is a small catamaran. It's about 6 feet long, and it foils kind of like a wasp. In Pensacola, they had the Foiling Film Festival, where they showed a bunch of cool different films, from offshore to foil boarding through channels in Hawaii, all sorts of cool stuff. The Mardi Gras parade happened to be going on at the same time as Foiling Week. They had over 120 floats. There was all sorts of people dressed up, all sorts of beads. It was a whole big thing. They closed down all the streets. It was really, really cool.
One of the most memorable parts was we're foiling into the leeward mark, and there's this boat just to windward trying to foil down, get mark room, and look back as we're giving them room, and all of a sudden we watch them do a crazy jibe, and the crew just get fully ejected out the back. And the whole time they were telling us that the birdie fish is very stable, doesn't capsize, and we just watched the crew just get absolutely launched out of it. Was definitely the foiling jibes, especially the last day, the last race. We nailed a foiling jibe onto the ley line to the leeward mark, foiled around the leeward mark as we're doing a sail swap, stayed up on the foils, and then continued going upwind at about 15 knots on the foils all the way up to the ley line, and then tacked, then went into the finish, and we probably finished that race almost a leg in front of everyone else, and that was really cool.
And now back to the show.
Right. Well, we cleared the deck to talk about the founders' talk earlier this week at the Nvidia Investor Day, which I guess used to attract a few thousand people, and now it's like 25 or 30,000 people try to come to the Nvidia Investor Day, something like that, Jason?
Yeah, I think they hold it in a basketball arena now. So quite a large event. What was interesting this time is the focus on inferencing, particularly inferencing throughput, the inferencing costs. Jensen made a point to discuss how data centers have to have a profit motive for the builder. So that was kind of a change. One thing that Jensen reiterated was some math that I proposed when the DeepSeek news came out, which is that these reasoning engines and the reasoning models have 100 times the compute requirement of the first generation of language models. And then he pointed out that their new generation of chips can perform inferencing 35 times better or faster than the previous generation. But the compute being a 100x increase is still outpacing the supply of compute that NVIDIA can produce.
Does that mean that their Blackwell chips are going to be way more than half their revenue in, say, the 12 months from the next 4 quarters?
Oh yeah, I forgot the exact number, but he gave the amount of increase in Blackwell sales expected this year versus last year, and it was multiples. Do you remember the number?
No, but I mean, he sort of teased that you're kind of foolish to buy an H100 today because the Blackwell is so much better, which, your cost per token is, in the best case scenario, a 40th the cost. So
just for the people on the phone, when you use, I know we've done this on prior Wednesdays, but just to make it clear, because we're going to hear that term a lot more, a token is kind of equivalent to a word, or how should you think about it? How should one think about a token?
Yeah, a word or a short phrase. Yeah. It's, kind of equivalent to a word. And one thing that Jensen brought up was in the past, the metrics have been how many tokens can a processor, a GPU, a CPU, or an ASIC, or whatever processor you're using, how many tokens can that generate per processor? Now his focus has changed entirely towards how many tokens can you produce per unit of input energy. So it's all about the power demand now. And Nvidia has taken really big strides into optimizing power consumption. So something Mike and I were taking out of the GTC talk was optimizations they've made around networking. So that would be what kind of the biggest one that stuck out to the two of us independently actually was they eliminated these transceivers in the networking equipment. So what that is, a little device that is on every fiber optic cable in the data center that changes the signal from an optical signal to an electrical signal. And they've eliminated those in their next generation of networking equipment. So you can plug the fiber optic cables directly into their switches. Semi-analysis, Dylan Patel, he gave an estimate that he believes it's going to save 12% of the total data center power consumption just by eliminating these transceivers. So, and there's two of them on each cable that connects every GPU to every other GPU. So you can imagine there's a lot of these within a data center. So it's a lot of equipment that got eliminated. But yeah, the focus has changed completely to being, power limited versus, the processor limited.
Yeah, and I think the big picture is they're moving down this path to, if you remember, I don't know what year it was, 2021 or so, or they had this vision for NVIDIA becoming essentially a data center company. And that is where they are today. I mean, all of these innovations are taking into account not a GPU that fits inside a computer, but rather a data center full of computers. So the spend of their R&D dollars, which are now pretty substantial, go into some areas that were never considered core certainly to NVIDIA, let alone a GPU company. So, their partnership with Taiwan Semiconductor seems to be as strong as ever. That photonics networking chip, that is based on Taiwan Semiconductor technology, presumably co-developed, or maybe quite a bit of it developed in-house at Taiwan Semiconductor. So it requires a significant amount of industry resources to get all this stuff together and working. So quite exciting.
Yeah. What about competition? If you're AMD or Intel under the new management, or Chinese chip manufacturer, SMIC, I guess it's called, what do you think is a competitor? What is just getting, I assume, as they move on to Blackwells and then to root for the Blackwells?
My impression is Jensen kind of doesn't even view those companies that you listed, particularly AMD, as the competition. I think he's looking directly at Google, AWS, the hyperscalers that are building their own chips. I think the inference market is much bigger than the training market, and that hasn't been the case until this year because, training the models took a lot of resources and they weren't mature enough that people were using them, but now they are. So since the inference market's so big, the ASICs have been assumed to be maybe more efficient at performing that inference. So Jensen's really taken aim at those companies building their own ASICs. And it was kind of interesting. He showed a graph of the quality of a token versus the speed of generating that token. He'll have you believe that the NVIDIA GPUs have the best performance curve of quality and speed of any of the processors available. And he believes that because you can, and they released a software layer that controls this, but you can kind of dial back, are you optimizing for speed or quality, versus an ASIC is less flexible, and you might design one optimized for speed, maybe there's another one optimized for quality. So if you're Google and you're creating these TPUs, maybe you're creating 2 or 3 variants now. So your task of keeping up with NVIDIA's pace of innovation has just gotten more difficult because you're having separate chips optimized for separate parts of the AI inferencing stack.
And to hammer that point home, just before GTC, Amazon announced that the pricing for their chip, Trainium or Inferencing chip, one of the two, at a quarter the price of a H100, which that's all good, except if you can get onto the new hardware, the new Nvidia chips are going to be far, far better. So we view the market as more similar to Intel, basically out innovating itself in its early days, except it's like Intel plus IBM plus Microsoft all in one company, right? Because they have the hardware, they have the software, and they build the computers. So this is the data center company, and there are competitors on certain fringe areas, but nobody's really doing what they do.
Before we sign off, does Amazon and Google, who I think are two most active developing their own chips, will they use them in their own data centers, or will they try to market them to third parties?
I think exclusively in their own data centers. I don't believe any of them have ever said any intention of marketing outside of their own uses. And really, they're optimizing for their own software stack too. So if you're AWS, you have this kind of plug and play software layer for doing AI training, and you've designed these chips specifically to host that software that you've built. So, they're really customized to their own data centers.
Mm-hmm.
Their goal is to develop lock-in to the AWS platform. So
right.
This is a way to further that mission.
Right. Now we've come to the end of our time. Jason, one or two comments on Apple and Apple Intelligence. Let's put it this way. What's the chance of Apple coming up with enough to have everyone want to own the next version of the iPhone? It looks kind of remote now.
It does look remote now. They've pushed out the time they believe they'll release Apple Intelligence till 2027. So that's quite a long time. And I think really the market that's the most at threat for them is China, which they have, depending on the quarter, 15 to 20% of the market. The competitors there will not be as slow. They'll release a product that's maybe not fully baked, and it'll be good enough. And I think they're at danger of losing the Chinese market altogether.
Good. Well, we'll take that up next week. In the meantime, everyone be well and stay healthy, and we'll be back exactly 7 days from now. Take care, everyone.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.